Traders Live podcast.
G'day everyone, welcome back to the Traders Live podcast. I'm half of your co-hosting team. My name is Chogas. Joined with me today is my other co-host Marto and our first ever guest. His name is Dan Nolan. He is a successful futures trader and he's going to get into some really, really good stuff today and talking about, 30 days where he turned $100 into $100,000, which is probably as extreme as it sounds, but looking forward to chatting about that, his love of rocks, a few other things that will come up. It's going to be a great episode. Dan, I've known him for 12 months now and have seen, I guess, the highs and, you have some lows, but they're nowhere near as low as the highs are in terms of your trading. Very successful, and also got the chance to meet him maybe a month ago. We caught up in Sydney, and one of the best things about Dan is in the trading world where egos run so high, I've met someone who is both successful and also very down to earth. And that is a very rare combination in trading. So without further ado, welcome, Dan.
Thanks, guys. Thanks for having me on. How exciting. Now, look, been following you guys for a long time, Marto especially, and I know he's doing some amazing things in the trading world, and Chogas likewise. We got introduced, as he said, 12 months ago. Um, Amazing space to be in the trading world in Sydney. And I guess that was really amplified for me throughout COVID times. Being introduced to these Discord groups, and just growing my trading career out of that, essentially.
Yeah. Mate, do you want to just wind back the clock? I think you said in your notes that you grew up in Sydney and sort of that was early life for you. Can you just, tell us a little bit about your upbringing and maybe some of the cornerstone moments for you?
Yeah, absolutely. So look, Sydney born and bred, was extremely fortunate during my young years to be able to work in a family business. So they had a plant nursery, selling to some of the big supermarket chains, so extremely high turnover. But ultimately, just being able to work with family throughout my youth was absolutely amazing for me. Um, learned a lot of hustle and grind, from a granddad who sort of came to Australia in the 1950s, built himself out of nothing. And what more can you ask for? Working and growing up with someone like that.
Yeah, good. Mate, now that we've sort of got the intro out of the way, I'm going to go ahead and start the hour right about now. So just for people who are unaware, we do a $20,000 sort of trading challenge in an hour, and we see just how well I guess everyone can do in that hour and see what returns they can generate. It's not for sheep stations. A lot of the guests that we have on can't even sort of trade their style within that 1 hour. But mate, you've gone to the effort of putting on some flashy lines and indicators. Can you just quickly run me through what those indicators are?
Yeah, 100%. So I thought it would make it interesting today. So I've chucked it on the 2 minute chart. And without giving all of my secrets away, I like to think that I've come up with a strategy, that can be applied to almost any time frame. And I know that sounds ridiculous, but essentially what I'm looking for is to put trades in either overbought or underbought, and or I guess oversold scenarios. So what I've chucked up here on the screen is a Bollinger Band, and also an RSI. And so I guess straight off the bat, we'll go and chuck a short on, for I think 50 units will do it here if we can do that. Place sell. Yeah, perfect. Now, I guess I can talk you through a little bit of what I'm thinking here. What I try to avoid is being chopped up. And I know that sounds ridiculous, but what you don't want to be doing is finding yourself in the middle of a range and then going, fuck, I need to exit because it's gone against me or it's gone against my thesis. You want to be able to have a thesis and then try and get the extreme of that range. So what I'm looking at here is an RSI that's gone up above the 70 range and it's sitting at the very top of the Bollinger Band. You know, you could wait a little bit to see if this came down and dropped down here, but given the RSI is sitting up there above the 70 and it's sitting at the top of the Bollinger Band, I'd be pretty happy to go and take a short there. So taking the short, and what I'm really hoping is that this RSI then starts to come back down to the 50% range. We'll assess it there, and hopefully it goes down into the 30% range where you start to take profit. And I over many years have started to realize that this combination, can be applied to almost any time frame. So maybe we can chuck it on a different time frame and just talk about it a little bit. So we'll chuck it on the hour. And again, here you can start to see like we're sitting here at the upper end of the Bollinger Band, sitting above 70. So you could take a short there. You'd probably start to get chopped up, but this is really where your stop loss of plus 10 to 15 points comes in. So you need to be able to say, this trade might go against me for 10 points, but ultimately we're looking for it to come back. And I know Marto's a pretty big believer of that as well. I think he trades in the 15 points sort of range. I'll probably keep it a bit tighter. 10 points is sort of what I'm looking at on the indices.
Yep, yep. So just really quick, 2 steps backwards here. Bollinger Bands are a standard deviation above and below the last traded price. Is that right?
Yeah, that's right. And it's really evening out those order flows to see where the strength of a stock or the indice actually is lying.
Yep, yep. And then the RSI is obviously a relative strength index. And how is that calculated?
But to be completely honest, I'm not 100% sure how it's calculated. It's
Yeah,
just
yeah.
it's just something that
Sorry, then how do you get those overbought and underbought signals? Like when are they generated? When price obviously trades below a certain number of periods of like a prior bracket, or
yeah. Or I guess you're starting to look where an acceleration of a price is going to stop. And I think that's really where I have made my money over the years. It's knowing when the market is about to be exhausted in a trade or is about to become very strong, going in the direction that you want. And so I don't know if it's okay with you guys. I guess we can roll into how we turned $100 into 100K. And that probably sounds ridiculous, probably unbelievable if you guys weren't there to witness it as well.
mate, it
So
sounds like it's straight off one of those YouTube ads. You know what I mean? Like it's
yeah,
straight off like, come join my course, $100 into 100 grand in 30 days. It's straight out of that. And
yeah,
and yeah, you're right. If I did not witness it, I don't know. I probably wouldn't be taking the podcast going, well, like, sure, this guy's full of crap. But yeah,
yeah,
I saw it. It's
yeah, yeah,
yeah,
Guys, can I just get a mic check? Can you guys hear me or no?
yeah,
yes.
sure can.
Because I really want to hear this story, but I've just been looking at your blank faces for the last 5 minutes. So hopefully we'll have better luck. But jump into it, Dan. Can't wait.
Yeah, so look, to premise the story, I never started the challenge with I'm going to turn 100K into 100,000. The premise started of had just closed out a month and thought, oh, that was okay. It was nothing exciting. What can we do to make it exciting? And I think at that point, someone had reached out to me and say, you're not doing your daily reviews as much as you used to. And I thought, okay, how can we make this a bit exciting? So I decided to show, like honestly and openly, how easy or how hard it could be to grow an account. So that was the challenge I set myself. And to be honest, whether it was $100 or 500 or 1,000, it really wouldn't have mattered. It's sort of the same thing. But to give you an idea, when you're trading indices, $100 means you can buy 3 lots at max. So at that point in your account, you're betting 100% of your margin. So it can be pretty easy to blow up very quickly. But once you start to get into the $1,000 account, you can then start to revert back to normal trading. You can start to bet 5 lots, 10 lots, and then once you've got an account of 5 grand, you can then comfortably trade 10 to 20, and you're only risking 50% of your portfolio, which is sort of where you should be, in my opinion. I'm not a firm believer of you need to have a $50,000 account to only be betting 1% of your account. I know that's a
Okay.
statistic that people talk about all the time. It's not necessarily how I like to trade. I guess another thing that I should premise with my type of trading, which goes against the majority of what other traders will say, is you don't need to be scaling into positions necessarily. I think you can just go, and if you have confidence enough in the trade, you can go and just find your entry, manage your risk, and then potentially, if the trade goes with you, you can start to scale out. But I like to be either in or out of a trade. I don't like to just be putting my toes in, if that makes sense.
Yeah, okay. And does that play into then the discipline that you have to have because you know that your bet size is substantial? You are inadvertently then taking only like better positions rather than sort of, oh yeah, throw I'll throw a small size parcel at that, and if it sticks, it sticks. If not, I cut
Yeah,
myself up.
exactly. And I think that's exactly what I'm trying to do with my strategy is be confident in the entry. And sort of as you can see here, it's pulled back a little bit already from where we entered. Be confident in your entry and manage your risk accordingly from that. If you were putting your trade, like say down at this level, you're essentially betting. You got no idea which way the market's going to go, but at least up at these ranges, you can have a pretty confident standpoint for your trade.
Yeah. So right now you're trading on the 2 minute chart. On your sort of monthly challenge, were you trading off the 2 minute chart? Were you going to those higher time frames? What was there any difference
Yeah,
in how you would trade?
yeah. So look, I've sort of prepared this earlier, and we can talk through it. So the period that that money was made over was sitting through sort of September October period, and it was a point in the Oz 200 where I had noticed that it had stopped making highs. Um, So once it started to put in this candle here, which was very close to the upper Bollinger Band, I knew that there was going to be a high probability that it would start to fall or come back to at least cut in these levels through here. And this is the daily chart. So it's always really good to have an idea of where you're sitting in the scheme of things. And then you can start to then move into the smaller time frames and scalp if you so desire. But ultimately you need to be on the right side of the market to make money. That's pretty much what it comes down to every single time. So there's an example. It was 42 days or 30 bars, as they like to say, and it dropped straight out of the 7,300 and came all the way back down to the 6,700, which was an extreme drop. I didn't necessarily expect that. I did sort of know that it was going to come back down to at least these levels. And once it puked through them, I knew that we were just in for a bit of a ride. So that's sort of where we
Mm.
got to.
Yeah, and I mean, is that part of your trading strategy in general? You sort of do a top-down analysis on, I look at the higher time frame where that is on a Bollinger Band and relative to the market, and then that filters all the way down through the time frames to then influence your
Yep.
positions intraday.
Yeah, absolutely. So this was the daily, just to give you sort of an idea of what I was talking about there. But then if you go and zoom into the hourly, you can then start to see that it gives you opportunities to manage risk in a really simple way. So let's say you got an entry, not at the top because no one's going to get that, but let's say you started to enter somewhere down here once you realized that that was an overbought position in the chart. It was going down. Once it started to go back up here, you might have thought, okay, I'm going to stuck a stop somewhere up here. It puked again. You knew you could cut a stop in at that next high, and then from there it was just a case of not closing your position because there was a chance that this was going to be a big move. Then once it got to down here, you can sort of see that it had wicked down out of the Bollinger Band. You knew then that you were going to be pretty close to the bottom. And whether you closed out down here or here, once that green bar had started to cut in, you you've essentially managed your trade. You've taken your profit off, and there's no reason to go and get back in a long position straight away. But you know, you've made that really good trade. You can then sit on your hands for a day or two, just cool your own mentality a little bit, and then reassess. And look, I'm not going to say that, you're going to make 10K days in here every single day, but here's another level that was set up. If you through that, and again, you would have a great opportunity to short the downside of that.
Yep. So in your 30-day challenge, were you holding positions overnight? And then now day to day, do you hold positions overnight at all? Like, what's the general holding time?
I do. I do often hold overnight, and it's probably one of the beauties of trading indexes is that they trade close to 24 hours a day. So you've got double the amount of time in the market that you do versus trading equities, which is traditionally what I used to do. And I think for me, being a day, because I've done the full circle, I've done long-term investing, done the day trading, or I guess short-term trading, and then moved into day trading equities to the point where you close out your positions every single day. Um, and for me, I just found you were never able to carry risk overnight. So therefore, you're only in the market 50% of the time of what you could have been in indices.
Yeah, yeah, okay. No, that's really, really interesting. Last thing on that $100 to 100K challenge, would you like if I was to plot your equity curve, was it quite parabolic in terms of, very, very small days with small account size, and then essentially in tandem with your account size going up, you had essentially the money you're drawing out of the market going up?
Yeah, absolutely. And I think that's probably a really important thing to recognize is initially I was only trading two lots, moving into 10, moving into 20. But then once you've got the account size and you have the ability to trade maybe 100 lots at a time or even 200 lots at a time, it's no different. It's just being able to change the mentality of carrying a big parcel because I've seen it so many times, and it happens to me every now and again, is you've got a big size and therefore you must be right. And the beautiful thing about indexes is they don't care about you at all. The majority of the time, they don't even know that you've got an order in there, especially if you're trading a CFD parcel. It's just you're so minuscule in the scheme of things that you're just going to get run over if you're wrong. So the best thing about it is you leave your ego at the door, and your P&L will be a reflection of that.
Yeah, like you either get on side or you
Or
get
your
run over.
or your steamroll. That's exactly right.
Yeah, yeah. Um, No, that's really interesting. Would you recommend that sort of $100 account challenge or any sort of similar sort of challenges for traders that are still trying to find, I guess, an edge or their place in the market? Like, was it a good learning experience for you? Or what, I guess, if you were a trader who's gone, wow, I've just made heaps of money doing that, like, or you've made heaps of money. If I was a trader still trying to find that edge and still trying to find my place, how would you go about taking those initial steps and approaches?
Yeah, great question. I genuinely believe that the P&L is a byproduct of the process. And I know you've heard that so many times, and I know so many traders out there will have heard that so many times. And it's so hard when you're starting out to think, fuck, I've only got $1,000 or 5K to trade with. I need to be betting my full parcel all of the time. I need to be in the market all of the time. And it's just not true. As long as you follow the process, you have a plan, the money will be byproducts. I think it's just coincidental that the $100 turned into 100K. I would have been perfectly happy with 5K, just as long as the process was there. It just so happened that I was on the right side of the market at the right time and had the right tools to be able to follow it through.
Yeah, okay. So you do think that some of the, not the overall success, but the success to take it all the way to 100 grand was a good market timing, good conditions that aligned with how you were trading. You were in the right sort of mind frame and everything like that. Like if I was to say, okay, go do it again in February, do you think you'd be able to pull exactly 100K again, or you think that the actual
No.
P&L results would be
No,
different?
100% not. And I think this month is a good example. Like it's just chopped about for the first 8 days, and I've been just, turning really tiny amounts. But it doesn't matter because, you've got a process. The right trade will come at the right time. And, if you make 100K in a month, what difference does it make if you're only making, 5, 10K the other months?
Yeah, yeah. No, that's really good insight. Thank you. Outside of the trading challenge, what is your account size and sort of month to month? Are you withdrawing month to month? Do you keep it a consistent balance? And how big or small does that look?
Yeah, so look, I'm a pretty firm believer that you don't need to have a big account size to make money. And I'll talk about equities. Sorry, I'll talk about indices specifically, but 20K would be more than ample to get you across the line. And you know, it sort of shows we're trading a 20K account today. And we're sitting here chopping about, we're up 160 bucks, but you know, it is what it is. That would be my recommendation is 20K a month for any retail. I mean, you know, if you're not retail, you should be, you could potentially size up, but 20K for a retail account would be more than enough. And yeah, I'm also a pretty firm believer in that you should be taking money out of the month, sorry, each month. Reward yourself, reset, don't blow up on a big account size because, you know, if you've got 100K and you blow up, that's 100K. But if you blow up on 20, you know, that's 1/5 of the blow up. So yeah, something to keep in mind. You just need to be able to stay in the market because the right trading conditions will come to you. You know, I keep saying it so many times. The market will stay stupid longer than you can stay liquid.
Yep, yep. No, that's very sound advice, and I mean, yep, I've been there. That
Yeah,
definitely,
we've all been there. We've all been there.
yeah, yeah. Just quickly jumping back onto your trading, we're about 15 minutes in. You've turned your 20,000 into 20,250 at the
Yep.
moment. So you're $250 up. The market looks like, yeah, as you said, it sort of has has peaked, and that short is playing in. Your RSI is coming out of that sort of high. Where to from here?
Yeah, so I guess we're also lucky. We're trading around the 12 p.m. mark. I know you were sort of doing that on your episode. Steal one out of your book.
Yeah,
Um,
yeah.
but
Geez.
look, there are certain times of the day where certain things play out. You know, the pre-market's the interesting one. It'll usually dictate the state of play for the day. Marto can talk more to that, and he has. And then yeah, 12 p.m. seems to be that mean reversion, and then you know you start to probably on a Friday see a peter off into the low side for close of market.
Yeah. Okay. Cool, mate. We have just spoken for the last 15 minutes on you making 100 grand a month,
Mm.
but I think people will be shocked to know that that is not it's not your full-time gig.
Yeah, it's not my full-time gig. I'm extremely fortunate that I love my work. And yeah, there's not too many things that have changed that over the years. So I'm an architect by trade, which is it takes a bloody long time to become an architect. So for me, it was a 7-year journey. It's a 5-year university degree, doing a bachelor's and a master's, and even at the end of that, you still can't call yourself an architect. So I guess to talk through my journey, you know, was high school educated to a certain level, was by no means the dux of the school or the brightest kid in the class, right? I didn't get offered a position for uni straight away, so I knew I wanted to be an architect, and that was probably out of pure determination at that point in my life. I was
Why architecture?
yeah,
Why
yeah,
did you
okay,
know
yeah.
that?
So I've always been very into arts, been into, I guess, culture, and architecture just seemed to be a nice mix of all of those things, that enabled you to get paid for essentially what was a something that I loved, right? Um, and so that's why I still love it to this day. It often at times feels like a hobby. I know you shouldn't say that about work, but it does. And yeah, I just love it. So yeah, look, didn't get a spot into uni, did a TAFE course, which was probably the best thing I ever did. Very structured, gives you an enormous amount of tools. So if there's anyone out there listening to this that doesn't know what to do, consider TAFE route. And then went to uni. When I was in uni, I already had a shitload of tools that other people didn't have, so uni became actually a little bit easy for me. Um, Based on that, I was like, what am I going to do with all my free time? So I started a job in the architecture industry very early on in my uni days. So that enabled me to just like step up the skill level, and I guess leapfrog my career a little bit. And then I guess also being a driven person, having worked with, you know, my grandfather who built himself out of nothing. I was also working weekends and doing odd jobs, laboring, all this sort of stuff. I was building horse fences up in the Blue Mountains. Yeah, all sorts of stuff. Just, you know, the good old hustle when you're 18 years old, and you know, being handed $100 at the end of the day. You know, that was your beer money for the week.
Yeah, yeah. Wow. And I guess that's your hustle then. Obviously, you're an architect and trading. Is that
Yeah.
hustle and that flame still very much alive for you, or where are you up to in terms of life?
It is very much. It probably amplified my love for architecture a little bit more, to be honest, because it meant, you know, there was a secondary income stream there. You weren't just going to work purely to make money. You're also there to enjoy it as well.
Yeah. Okay. So
And yeah,
you
and
went.
I think,
Sorry.
sorry, I think that's probably a really important distinction for me is because trading wasn't my full-time job either. It just allowed the I guess there wasn't so much impetus on making profit, which I think is where people get caught up.
Yeah. So you think that by being able to focus on process more than withdrawing money from the market, that allowed you to sort of stay in there and build
Yeah,
essentially a rigid trading system.
yeah, exactly right.
Okay. Yeah, great. It sounds like you're a very hard worker between TAFE, uni, a lot of work. Is that you say your hard work has sort of got you to where you are?
Yeah, I think so. It's just a determination to prove myself right a lot of the time. So when I was younger and were telling people of my parents' generation that I wanted to be an architect, like, fuck, why do you want to do that? They don't get paid very much, like it's a shitty career. And I was like, you know what? I'm just going to prove you all wrong and go and do this. And you know, it was also one of those things where people said, you know, you need to be really good at maths, you need to be really good at engineering and physics and all this sort of shit. And it's just not true at all. And I hope that rings true for a lot of people who have been told that like you can't do it because you don't have the skills. And it's just not true because you just learn it as you go. And I think trading for me has been one of those journeys. Absolutely.
Yeah, yeah. No, that's yeah, really great. And I guess now you've got both, and you say that you're very, very happy with your job. You're making a lot of money while trading. Is there anything on the horizon where one of those drops off and it's just the trading, or you're just architect, or you're really happy with the balance that you've got?
Oh, for the moment, just happy. And I think it's one of the first times in my life where I'm just content. I just got engaged with my partner. So that was an exciting thing for us.
Congratulations. Yeah,
Thank you. And
yeah,
and and then also recently just buying a house as well. So you know, there are definitely times in your life, and I've probably been disservice to myself in the past not doing it, but just sitting at one point in your life being like, shit, everything's not too bad. Yeah. So just
yeah.
content at the moment.
No, that's really good because I think for successful people, it's always uh, you're never content. It's always on to the next thing. What can I be doing more? But yeah, taking some time to sort of look back on, you know, there was a time there where people didn't think you could be an architect. There was no money in it. You didn't even get a spot in university, and that would have been a really big, like for you at that time. That mental would have
Yeah.
been really, really difficult. And I mean, now you're a successful architect. You're obviously successful in family and that aspect of your life as well, which is, I mean, it's so interesting just to see how people can sometimes forget about all that other stuff. And yeah, it's good that you're basking in it.
Yeah. 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 Absolutely.
Yeah, no, that's good. Do you think your younger self would be really happy with sort of where you're at?
Yeah. I was actually talking about this with my partner the other night, and just saying like, fuck, I actually didn't. Sorry, I knew I had goals which I'd set when I was younger. And it's probably this year that some of those goals have started to really play out for me, like in my career and also just personally. So yeah, just yeah. If my younger self was listening, like, good job, you're doing it right.
Yeah, yeah, no, that's great. That's awesome. That's awesome. And I guess now just back on our screen for a second here. We
Yep.
we've seen a bit of a kick up. Where are you looking to take profit? Are you still holding a 10-point stop above where you entered? What's that looking like for you?
Yeah, look, it is, and I'll tell you sort of why. It's not really coming up to where we had the position entry yet. You can sort of see where it ticked the Bollinger Band there, but something which is interesting is on the RSI, it had started to cool off, so the strength came back a little bit there. It's risen back into the mid band, but because it hasn't ticked up into that 70 or above, I'm still happy to hold short, hoping that it goes down into the 30. And if it goes down into the 30, then we'll sort of look to take some profit off, I think.
Yeah, great, great. We've spoken a lot on your professional life now. Where did investing and trading sort of first come into your
Hmm.
life, and what form did that look like?
Yeah, look, I think it started probably around when I was 16, 17, and wasn't actually investing at that point in time, but my grandfather was, and that was sort of the beauty of being able to work with him. We'd work, have a morning tea, work, and then have a lunch, and then in those lunch breaks and whatnot, everybody would be sitting around talking about what the share market's doing, what the stocks are doing, interest rates. I remember interest rates at that point in time were a bit higher than they were now, so everyone was like, "Oh, I make 7% in the bank, all that sort of stuff." But yeah, he was uh, probably an early uptaker of the stock market. So he had a vast portfolio of different stocks, very diversified throughout the large, mid, and small caps as well. But the ones that he did really well on were the small caps where he invested early and then, just sat on them, waited for them to do something. Meanwhile, he's getting dividends on his large caps. So that was interesting to see his point of view on how you should set up a portfolio. And then I think as I started to get a bit more money when I was younger, started to look open, what was it back then? Probably an E-Trade account with ANZ, and then just put five k in, and then start trading some of the shit coins that were kicking about back then. I remember some of the first ones I was trading. It was like Dark Horse Resources, and they were just shitty mining specs back then that ultimately never really went anywhere. But that was interesting to me to be able to put 5k in with the potential to double that in say a couple of years.
Yep, yep. So you were a buy and hold of those small caps for the first part of your
Yeah.
sort of investing and trading.
Yeah, that's right. And I've had this advice a few times from people who are older than me. It's when you're young, you can afford to take risks because you can always make that money back. When you're older and in your retirement years, your sole job is to hold on to that money because you don't have the ability to remake that money. So that's sort of stayed pretty true to me. Took risks on some of the smaller caps that were floating about, and some of them didn't work out so well. I listened to your episode the other day where it doesn't work so well. I have one of those as well, and yeah, it just goes around in circles, doesn't it?
Yeah, yeah. So you were pretty active in the small cap space. Did you take a hit like I did, and that prompted you to go elsewhere, or where did you go to after your first sort of taste of the market?
Yeah, so the market is interesting because it can convince you that you're very good at your job very easily. And complacency and probably confirmation bias are the two biggest things which will get you in the market. For me, it was confirmation bias, and at that point in my life, I probably wasn't as aware of it as I am now. But I had invested this company, which was called Australian Mines, lithium, nickel, cobalt miner, and had put a fair chunk of money. So it was, I think, $40,000 into that. It had done really well. It had done really well, and I think that account had grown significantly. I can't remember how high it had gotten, and I was young, and I was like, "Oh, this thing's gonna ride out. It's gonna become the next FMG." You know how that story always plays out in your head. You hold on to it. Partook in some capital raises because I thought that was a good thing to do, get some cheaper stock. And then over time, I just realized that the director at that point in time was not as honest as he had portrayed himself to be. And that's washed out many years later. Zeke took him to court, and he was removed from the company as the director. So some of the things he said along the way, which led people to invest, I was probably one of them, were not as true as they should have been. But I had researched that particular stock to the nth degree. I thought I knew everything about it. I knew everything that could go wrong with it. And it wasn't necessarily, no, it was one announcement, a little bit like you, where they said that they were going to get funding from an international battery stock producer, and that contract fell through for X number of reasons. And then it was just pretty much down from there. And I was like, oh, eventually it's going to rebound. It didn't. And then from there, it was just all downhill. So I got out, not for the worst loss, but I definitely walked away with less than the 30 or 40 grand that I invested in the first place.
Yep. So I think that's probably a very common arc, as I sort of touched on in my episode, common arc for people who are getting into investing and trading. That they have some highs, and then they get taught a few expensive lessons, which I mean, you always want to do without them, but I mean, it sort of forms. You need to. It's like the cost, cost of
Yeah, it is.
getting the education.
It is. It is. It's just like paying for a university degree in one way. It's just you need to be able to analyze what you did wrong in those circumstances. And for me, that was acknowledging that potentially, although I had studied this thing to the nth degree, potentially my hypothesis or conclusions were not correct. And that was probably, I had a thesis, and then I was I wouldn't say necessarily looking for things to back up my hypothesis, but those things were much easier to find than the red flags.
Yeah. No, for sure. You always, look at the shiny things and disregard those things that are, red flags. Like what I didn't put in my episode was the same direct, like the CEO and everything that I'd spoken heaps to, sold 50% of his shares sort of 6 months or it wasn't even 6 months. It was like 2 months before it all went bottoms up. And it was he put the post out that he did sold 50% of his stake, and he just said, "Oh, I'm transitioning the business to people who can do it on a production basis rather than this startup works." And for that reason, I'm taking a step back. And I mean, you just lap it up. You lap it up. You're like, wow, this guy's a good manager, and this guy knows his business because he knows when to step away, and he did know when to step away. Just not the right reasons.
Yeah,
Yeah.
yeah. Yeah, so look, that was probably the second phase of my career, was investing in companies that I thought were going to do really well. And then I was like, fuck, what's the point in holding a stock for a year or two to end up at square one? So I think, or maybe let's fast forward a year or two. We start to see the emergence of day trading on, I guess, social media, so Twitter, all that sort of stuff.
What year is this when you say that?
It would be about 2018, 2019. So then 2019, I start to become a little bit more aware of the day trading scene in Australia. Some of the people who, Nick Fabio is a classic, who was traditionally posting his daily profit and loss every single day. And I was like, fuck, he can make $1,000 a day. Wouldn't that be nice? And so I started to learn how to day trade, moved from trading chess, equities into CFD. And then, I mean, for me, it was pretty much a self-taught trade. I didn't really necessarily have a mentor or anyone there to be like, this is the XYZ path you need to go down to achieve this. It was just a lot of looking, and just absorbing some of the information that the guys were spitting out. So very appreciative for all of those early guys that were sharing their P&L. Good hustle. And then I got involved in the, I guess, hot copper day trade thread. So I was one of the main posters there for a long time. And then from that, I got invited into a Discord group. And then that sort of brings us to 2019, 2020, and COVID happened, right? So everybody's locked down in their houses, in their apartments. Every second man is trading the stock market. The Hong Kong day trade thread just turned to shit. Like it was just shit. People coming in and just claiming they knew everything. So anyway, I sort of gave that away a little bit and moved into a Discord group of sophisticated investors, and they opened my eyes to really how shitty the ASX can be. Like throughout COVID, it was funded primarily on insider traders is not the right word, but if people who are privy to information before the rest of the market has it, and they're typically the people who are then offered the capital raises, and therefore know what the I guess share price is going to do in the next short while. So, I mean, everybody saw it. There would be people who would be given shares in a company. They would pump it up on Twitter. The shares would then be released out of the credit raise, and they would sell them straight away for a massive profit, leaving retail to hold the bag essentially. So I started to realize how shit the ASX was, and just moved away from it completely. And so that's
Yeah,
how.
because that kind of ruins the efficient market hypothesis, right? That like it's a marketplace where everyone has access to the same information, but there's obviously a select group of people who didn't have that, and they essentially at the third stage of that hypothesis where there's people who have different information to what the rest of the market has, and that
Yeah,
makes it
yeah,
near impossible, I guess, to
yeah,
make money.
absolutely. It does if you're a retail and you don't understand what is happening in that regard. At least when you understand what is happening, it can open your eyes to limit the possibilities of what may go wrong with a position that you've got. Yeah, it was. I just was never. You saw it so many times. Like a company would go into a credit raise, it would be pumped up the next day. All of the people who bought or were given stocks in the credit raise would be selling into that pump, and then it would just bleed out for the next 3 months. And then those people who sold out may have bought their shares back for half of what they paid for them if they wanted to be involved in the company at all.
Yeah, yeah. So then you obviously decided, okay, well, time to get out. Did you just go straight to indices based on that, or was it a natural progression out? How did that
Yeah, it was
transition
it
play
was
out?
it was a natural progression of me moving to day trading. And that's day trading in the most traditional sense where you don't carry positions overnight because you don't know what the potential risk is. Coming to the market every morning fresh, reading through 100 announcements, trying to pick the best five out of that day, and then all piling in. First in best dressed, and then hopefully being able to make a profit at the end of the day.
Yeah, yeah,
And it was look for me it was a tough grind. Like that is a tough grind having to wake up every single day and read through, you know, on a good day, 20 announcements minimum. And I love the market, but I'm not so invested that I want to follow the bloody tenements of every single mining company. And it all plays into the neurology and all that sort of stuff as well. I just didn't have the time to dedicate to being able to map every single mining company just to be able to make $100.
yeah, yeah. No, that's really interesting that you sort of started there and got really into that. Your early days of strategy formation, I mean, you touched a bit on those guys who were consistently putting out P&Ls, and I'm sure you sort of spent time back solving their trades for the day and things like that. What was instrumental in your early days in finding profitability?
Um, Learning very quickly that if you're in a losing trade, to get the fuck out like, as soon as you can, because it's more than likely going to go against you. And yeah, just being able to limit the losses, and I think that has been instrumental in building a bigger portfolio for myself. Is yes, you might be able to make 5K, but if you're going to give back 5K the next day, what's the point in that? You need to be able to make 5K and give back 500. That sort of thing.
Yeah, yeah. No, that's great. And you're now pretty much all indices. Do you have much of a portfolio like your granddad or anything like that that sort of sits in the background, or how do you allocate your capital at the moment?
Yeah. So my capital is in longer term stocks, and in a diversified portfolio as well. So there's a few in there that are just amazing dividend givers. My Aussie True Blue, our iron ore stocks have been very good for us for the last couple of years. But then there's also like some of the junior mining stocks which are doing really well. You've also, what I like about indices is it's more of a macro um, thinking products to trade, if that makes sense. Like it's primarily driven by what other commodities are doing in the world, and also what the other large indices in the world are doing. I trade Oz 200 just because, I'm Aussie and I love Aussie things, but also because I understand the sizing of it. It's what I started out on, and I just understand the sizing of it, so it makes sense for me to continue trading it. Um,
Yeah.
but that's actually what has always interested me in the markets is following the macro scale things, not so much the micro scale, which I think pissed me off a little bit in the ASX trading. I like waking up every day and reading the financial review, finding out what all these different countries around the world are up to, what this certain company is going to do, what the commodity price is doing, how that might affect our indice price.
Yep. When you read those financial review articles and, maybe something goes and happens in oil or something like that, do you ever touch those and trade those when there is macro news around them?
I don't, but it keeps me interested in what might happen in the indices. Yeah, indices just seem to be my bread and butter. I understand it. I don't understand the how to trade gold or oil so well. I just probably recognize that when oil and the USD are starting to go up, it's going to have material impact on what we're doing.
Yeah. Mate, I wouldn't be a good host if I didn't sort of bring our attention back to the trading. I know it's easy to get caught
Yeah,
up in the conversations. Just for our audio listeners, we had a short that was in the money for, probably 20 minutes there, and now the Oz 200's turn. It's driving, quite aggressively.
it is. It is.
We're now looking at $400 in the red. Dan, what are we thinking?
We're seeing how fast we can blow up the count, right? That's what we're doing today.
Yeah, it's the inverse trading. Yep.
Inverse trading, yeah. Look, yeah, we'll take a little bit of a back foot here. I'm not going to take the full amount out actually, and I'll talk through that why.
Yeah, I was going to say, just sort of now seeing that RSI, I know it's not, you're seeing the RSI and the Bollinger Band sort of exceed upper
Yeah,
limits and you're taking positions off. Yeah, talk me through why you're now not adding. Obviously, you got account balance issues, but yeah.
yeah. Oh, sorry. We're going. Yeah, 25. So that's just to remove a little bit of the risk out of the trade. Based on the parameters that I've set up for the way that I trade, we're getting up into the upper RSI and also up into the upper Bollinger Band. And that indicates that it might be starting to get overbought, and there could be multiple reasons for that. We cut in a higher low here, so there could be some traders who are speculating that we're going for a bit of a bull run here, but we're sort of up in the RSI, so the market might pull back. If it doesn't, I've got a stop loss that I'm going to hit at around the 71.80 level, and then we'll just have to call it a day, and then maybe sit on our hands and see what happens.
Yep. Well, mate, you've got 15 minutes, 14 minutes left, so we'll see if you can at least bring it back a little
To-
bit over the next 15.
yeah, well, look, it's the way the market goes, eh?
Yes, no, it is. We've just spoken about your transition a bit from, realizing the ASX is a little bit of smoke and mirrors there, and now going to indices, which is obviously more liquid, moves on macro factors, I guess, that doesn't have as much sort of insider news on it, in a way. If I'm someone who has been intraday trading the ASX, doing the small caps thing, and I am at the same position as you, I don't appreciate being the one that gets sold into and being the one holding bags. There's too many news announcements to read in the morning. I read five and then it's the stock over there that I didn't see that moves. What's what's the transition look like? What advice can you give to those people who are maybe looking to take the leap into indices and trading similarly to how you do now?
Yeah, I think that's a really good question, and I think the best way to answer that is probably you really need to have a think about what you're trying to get out of the market specifically. And I'm not saying that if you're finding it hard in the ASX that you need to um, sell all your stuff and get into indices straight away. I think you just need to analyze the time frame that you initially got into the trade in the first place. And I think it goes back to my original thesis of I had a premise here that on the daily there was something that was going to happen. Um, Therefore, I guess sorry. How do I describe this? The best advice I ever got was enter and exit your trades on the same time frame. So on this particular trade premise, I entered on the daily, and therefore there was a reason to exit on the daily as well. And there were multiple times that happened for me. It was down here, and then eventually all the way down here. Um, so if you were trading the ASX, I think you just need to go back to your initial strategy and analyze why you're in the trade and how long you wanted to be in the trade in the first place. Like if you're trading small caps because you want them to grow over a 5 year period, then you need to be able to sit and wait for that full 5 years for it to play out. Yeah, I just don't the time frame. Don't chop and change. And that's why it takes so long for people to get into the markets. Like for me, it's been probably it's well, like I said, 16. I'm 32, so there's nearly 15 years in the market. It's taken me at least I'm gonna say a solid 10 of those years to find my grind to be consistently profitable.
Yeah, okay. Well, that's not great. I've probably been in the market five years now, which by your maths gives me another 5 years of struggle street before doing well. No, that's really good. That's really good. And then how did you go about actually, obviously you use RSI and Bollinger Bands, but then you also have an understanding of the macro and market structures. Early days, how did that discovery of using those and fitting and forming your trading style, where were the resources or what were you using that formed how you trade today?
To be completely honest, it didn't click for me at all very early on. Like I'd be waking up in the morning, coming to the desk. I would potentially, you know, open up a report and go, oh yeah, this report looks really good. Let's hypothetically say it was an iron ore stock. Oh, this looks really good. I'm gonna take a long trade in this because they've done a good job. Meanwhile, the commodity of iron ore is down 3%. No matter how good that report is, you're never going to make money on that trade because the macro says the stock has to go with the macro. It doesn't matter how good that single report is. So understanding how the macro impacts your little shitty ASX micro stock is probably key to I guess understanding just the flow of the market and ultimately indices is that's what it's all about. It's just the flow of money and the flow of the market. It's constant. It'll always be there. You just need to find yourself on the right side or and hopefully not get on the wrong side of it.
Yep, yep. Mate, just quickly back on your trades
Mm.
here. We're sort of seeing that RSI now sort of peak and come down. Is this where you would typically be looking to enter to a short or?
Yeah, yeah. Well, I would. Yes, typically I would. And for the punters at home, let's just go and add back another 20.
So you now have 45 units short here, and we've still got some of the original parcel we've just added back in, about 10 minutes to go. So let's see. Yeah, let's see how it goes. But are you having to watch, obviously, the screens quite regularly, although you're still working a job? What does that balance look like? Because it's obviously a very visual style of trading that you're running here, and on this time frame, you have to be quite active there. I'm assuming. How does
Yeah,
that day look like for you now?
yeah. So it'll typically be like a morning and afternoon event. And if we go back to say, what are we sitting on here? The 30-minute chart. Again, it's sort of the same premise. You're just looking to try and buy the extremes of the market. Like for example, where's the morning? Yeah, so this is sort of sitting in the morning. I guess you just want to assess where you are with your strategy. And if it means that you can't enter a trade, then you just need to be able to sit on your hands as well. For me, if I'm trading and having to work at the same time, it's smaller size, much smaller size, because you then need to be able to have a probably a larger stop loss, if that makes sense. Yeah, again, again, it's just going back to you're entering a trade based on a 30-minute chart. You then need to be exiting on a 30-minute. You can't enter in a 30-minute and then towards the end of close go and close your trade on a 2-minute chart. It just sort of doesn't work the same way.
Yep, yep. Typically, how many trades do you take a day?
I would say when I'm in, if I'm looking for just those larger swings, it would be maybe 2 to 3 a day. However, if I'm scalping on the 2-minute, it would be probably a little bit more. Like, I guess if we weren't hypothetically talking as much as we were, you could have gone and taken profit down there, which probably would have been the smart thing to do. But I guess I got a little bit cocky,
Hindsight,
and
beautiful.
such is life. I just wanted to beat Mato, that was all.
Yeah, yeah, mate. I think he sort of rigged that. I think he wanted a very specific time to trade. I think he had a few insights from his data that were advantageous, but I guess good for him.
But look, you can see the premise of what I'm talking about. We were able to make a trade there at the top of the Bollinger Band. If I was smart, I would have gone and taken it off at the bottom of the Bollinger. It would have then, if I was being super scalpy, enter a long. Once we start to get up here and the RSI starts to get a bit cooked, you take your profit off, and then maybe take 50% of your profit off here, and then see what happens. But it's for me, it's proved to be a pretty solid strategy. Now that I've given it away, I'm sure the edge will change tomorrow as it does. But
Yep, yep.
I
That's what
think I
happened with
think
my midday reversals.
look, I'm all for the community helping each other. Like I said, it was really helpful for me in the early days to be able to see how some of those day traders were setting up their trades, and likewise willing to do the same.
Yeah, yeah. Um, so you're quite like you're flipping quite often in your trading, right? Because when something enters an extreme, you'd be covering a short, and then you'd be maybe jumping in a long at the exact same time, assuming that yeah, you're getting those U's around those extremes of the Bollinger Bands.
Yeah, not to be completely honest, not if I'm trading on the daily, but if I put it on the 2-minute or the 5-minute, then absolutely, because that's the beauty of trading these CFD instruments, is that you've got both sides of the market to play with. Like, I just personally don't necessarily, if you've got a strategy that works for you, what is the point in taking a short here and then waiting all the way back up here to take another short? Like, realistically, you should just be there, boom, boom, boom. And that really just amplifies your time in the market on both sides of the market.
Yep, yep. Is there any resources that you've since found, like later in your trading life, or right when you were learning trading, any resources, books, videos, people that you found were instrumental either in mindset or the actual trading strategies itself that you might be able to sort of pass
Yeah.
on?
Yeah, absolutely. The go-to for me is Mike Bellatore's from SMB Capital's One Good Trade. And that is pretty much the ethos of my trading mindset, is one good trade, then one good trade, then one good trade. He and I listened to that on through a podcast, audio book. I'm not a huge reader, but if people want to read it, I highly recommend. But I listen to it just as an audio book. And for me, just that mentality of one good trade, one good trade, one good trade is really what it's about. Um, the market doesn't care at the end of the day whether you make a bad trade. Just brush it off and go and find the next good one.
Yeah. No, that's really good. Are you still actively working on your trading strategies, or have you sort of refined that now where you're pretty comfortable with how you're trading?
I've refined it to the point where I can manage loss, and for me, that's really what it's all about. I know it's very easy to sit here and say, yeah, you make 100 grand in a month. That's all fantastic, but it is really for me about holding on to the money you've made and not giving it back to the market. The market just wants to take it off you every single time, and you've got to find a way to not do that.
Yeah, okay. So is that how you define, um, that your trading is at a comfortable place when you know where to how to manage loss?
Yeah, I think it is, because it is the market is very good at convincing you that you're good at your job, especially if you're just trading equities. It very there are people out there who have just thrown money in the market without understanding how the market works and have doubled their money, and they think, oh shit, this is so easy, and then they'll go and do it again and just blow it. And that's ultimately what you need to avoid.
Yep, yep. Okay. No, that's it's really interesting because some people, I guess, will almost overfit trading strategies in a sort of colloquial kind of way where they're never satisfied with how they're trading and they might sort of take a small sample of losses and then go and try and overfit another rule on top of that that might then disrupt their own trading.
Yeah, 100%. So where are we? We're sitting here in October, right? So I'll speak pretty openly about this because it's pissed me off. But I haven't been able to make money. I haven't been able to make money in the market since the end of October, right? That is because I had a thesis that the market was going to puke to the lows from here. So although the chart said to go and do this, I had a thesis that the market was going to go lower. So I have been trying to short here, all the way up this chart. And it sounds ridiculous, but I haven't actually lost that much money in that time frame. It's just that it's just that I haven't been on the right side of the market. And that is ultimately what it's about. Like, yeah, it's annoying to not make any money here for a month, but I may have only given back to the market 2K, I'll say, over that month. And that's just being able to recognize that you're not on the right side of the market and just wait for the right time when you are. And I reckon we might be close. But I don't like to make too many predictions, but we'll see what happens in the next short while.
Yeah, cool. Two questions off that.
Mm,
But really quick, we've got about 20 seconds left, so I'm
yeah,
just
sure, go.
going to give you a quick heads up that your time's coming to an end. We're sort of what do we got? $19,560. Far out. If we given this another 5 minutes, I think we might have had a different result. The market does look like it's sort of backing off a bit off that top of that Bollinger Band.
Yeah,
So
it is what
that's
it is.
really
Yeah.
interesting. So yeah, if you want to go ahead and close your positions now, we're all done with a. I'll stop it at $19,567.
Yeah, all right, go ahead,
Oh,
do
you
that.
closed? Yeah. Perfect. All right. That's great. Two questions off of the last couple of months where you haven't been able to make money, but
Yeah.
you've limited your losses to sort of 2 grand or so. Um, was that done by cutting losers quickly, sizing down, or the combination of both?
Yeah,
Which was it?
so initially it was cutting losers early. But for me, once I wasn't able to turn a profit for, like, let's say a week or two, I recognized that there was a high probability that my thesis for the market was wrong. And stupidly, I kept staying with my thesis, but on a very small scale. So, like, I think even in the last week or so, I've been trading two lots, just waiting to see if the market will change in the direction that I think it's going to go. And then we'll just wait for it. We'll wait for the signal, because it will come eventually. Markets are cyclical or cyclical. And yeah, so for me, it's just about minimizing probably the risk. And you can do that in two ways. It's cutting it early, but also reducing the size of your trading parcels.
Yeah. Some people probably have a lot of issue with reducing size and admitting they're wrong. Is that something that came naturally to you, or do you have to
One,
work, like, did you work on that, or?
yeah. No, it's something that I have definitely worked on, and I think that came to fruition through that big loss early on in my career. Again, it's about the confirmation bias being probably the biggest destroyer of wealth. Just being able to recognize that your thesis is wrong is going to do you a world of good. You know, you need to come to the market with an idea, but if that idea doesn't work, so what? As I said before, the market doesn't care. It doesn't even know you're in the market. So what are you trying to prove? You're only trying to prove it to yourself. And the faster that you can acknowledge that you are wrong, the better off you'll be.
Yeah, cool. And I guess that sort of half answers that second question on that period of time where you thought the market was going to puke and it moved the other way against you. Do you sort of blame that on a bias or something that you were stubbornly still holding as a mindset on which way the market was going to move, or were you still you think yourself very, very open-minded and still receptive and just wasn't a great
I
period?
I am open-minded. What caught me off guard on this particular move was the speed and scale of it. It was the macro narrative which changed within a day. It was the Fed came out and said they're not going to raise. The market went, holy shit, this is a change in narrative for the Fed. And what took 3 to 4 weeks to get down to this level took 1 week to get out of it. And that absolutely blew me away. And it's something that I know I've talked about before. The market always wants to be green, and you've just got to be so cautious of that if you're on the short side of it. The market always wants to be green because the majority of players are can only be long, essentially, right? If you think about all of retail, they only have access to be long. So the moment they have an opportunity to be long, everybody will jump in. And it's also this in modern times, it's the speed in which capital can be deployed because you've got superannuation funds sitting on billions of dollars that need to be deployed in the market all of the time. So the quicker that gets deployed, like it'll just blow you out of the water. And so, I was wrong here. I admit that, but at least I was able to recognize I was wrong. And if I didn't, the profit that I made in 3 or 4 weeks would have been blown up in a week. So that's a real eye opener that I think people should potentially recognize.
Yeah. And it was a really sort of aggressive time for buying in the market, which was interesting because you're right. It's usually the stairs up and the elevator down, but it was obviously flipped on its head over the last sort of few weeks where that rhetoric changed from the government
Yeah,
in the US and or not the government but the central bank, and then
yeah,
yeah, off to the races the market went, and yeah, you're right, they were so eager to deploy capital so quickly.
yeah,
Yeah.
yeah.
Has the market changed for you at all over the years you've been trading? Like we've just spoken about,
Mm.
like the everything being deployed really quick, billions of dollars, things like that. Is the speed that the market reacts to news and things like that, has that quickened, or is there any changes in characteristics that you've observed?
I think because there is more capital in the market, which is just an absolute given, right? Given how much stimulus they printed over the last 5 years, there does seem to be a bit more flow on the larger time frames, but equally it's very choppy. And something that I think about quite often is you've got the volatility index, right, which is the VIX, which is supposed to be a key indicator of volatility, not of the market being green necessarily, and we're sitting at all-time lows. Meanwhile, in this 1 week, I would argue was the most volatile I've seen in probably the last 2 years. Yes, it was to the upside and it was green, but just because it was green doesn't mean there's any less volatility in the markets. So I think that is something that I've noticed in the last couple of years is the speed in which it moves is it's insane. And you can see it on the US indexes. Like if you look at the Nasdaq, especially, like that thing just has been moving unbelievably quickly, in very short amounts of time.
Mm. Yeah, no, I 100% agree with that, which is, yeah, it's been interesting to watch unfold, and I guess it's interesting to see, yeah, how markets can change from decade. It's almost decade to decade sort of thing.
Mm,
As the world changes. So I
you
think
gotta
in
gotta
10
be
years' time,
adaptable,
the
right?
markets will look. Yeah. It's it. You either get on board or you get run over,
Yeah,
coming
that's right.
leaving it all back. Yeah, mate. What's next for you? Like where are we at? We're talking next 12 months, 5 years. What are your hopes, dreams, goals, ambitions?
Oh, that is a good question. Look, I do really like I said, I like my job. So I think we'll be sticking around at that. What I hope it will give me is a little bit more freedom to explore my own thing over a period of time. And then potentially just work with the clients that I really like to work with. And for me that is often not necessarily the people who have the biggest budget, but it's people who have ambitions for their houses. And that might be a young family who just wants to add a small addition, and that small addition changing will completely change their lives. I'm actually a big believer in architecture of, we call it regionalism, and that is creating houses for the specific environment that they're designed for. So it's a tailor made house for the site, for the climate, for everything that you live in. And I guess just to touch on that a little bit, what I'd really like to see over the next short while is a change in thought process for the general public of building bigger houses for themselves to just building what is necessary for themselves. Being a little bit more humble. The McMansion, as we call it down here in Sydney, has done no favors for the environment. It's done no favors for the suburbs, full stop, because all the houses look exactly the same. I think we need to go back to our grassroots a little bit and appreciate the environment and just have a little bit more thoughtfulness for what we're building. And we're talking about an undersupply of housing at the moment. If we're actually going to build housing, it's got to be in a thoughtful way, for the future generations, not just for what we're doing now.
Yeah. I mean, we could probably talk on this for an hour, but how do you think that changes with people's consumption pattern is only going one way, and it's such a big topic on how we live our lives, and how do you reverse what like I think comes down to that want for the biggest and best, most like people are consuming crazy amounts compared to what they were.
Yeah, look, maybe
How
maybe
do you think that changes?
maybe it will actually be washed out in this tightening of rate cycle and monetary policy, because what we're seeing at the moment is houses which were designed, say, a year or two ago are now going to tender, and they are essentially not able to go forward because the price of building is so exponentially more than what people had expected in the first place, that they just can't build them. So you know, let's as a society, let's have a think. Do I actually need 5 bedrooms, or is 4 bedrooms enough for my 5-person family? The answer is probably yes. And for that, you'll probably end up with a much better space. And yeah, I I think the banks are sort of doing a good job at washing out the discretionary spending. But let's make people's money work for them as best they can.
Yeah. No, that's a really good way, and I think we'll round it out there. How I know you're not too active on Twitter or X, but I think people can reach you there if they want to chat more.
Yeah, no, absolutely. Anybody who wants to reach out, please do so. My handle is DB Charts or DB_charts. You'll find me floating about there, dribbling some shit about the markets, posting a few charts here and there, and that's about it.
Yep. Yeah, good. And again, guys, if you did like what you heard, obviously, Dan, thank you so much for your time today. It's been really insightful, and I think people who are still getting their berries on trading are going to get a lot out of this episode. We sort of really get into the nuts and bolts of the trading side, so that is amazing value. Please leave a like, share it to someone who you think could value from what Dan's had to say today. But mate, that might do us. Thank you.
Absolutely. And thanks for setting up the podcast. It's great to have this sort of stuff for the Australian trading community. Really appreciate it.
Yeah. No, awesome. All right, mate. Thank you.
Pleasure. See ya.